RBI has published guidelines on managing risk and code of conduct in outsourcing of financial services. The guideline outlines business continuity and management of disaster recovery plan. As per the said plan, a bank should require its service providers to develop and establish a robust framework for documenting, maintaining and testing business continuity and recovery procedures. Banks need to ensure that the service provider periodically tests the business continuity and recovery plan and may also consider occasional joint testing and recovery exercises with its service providers. In order to mitigate the risk of unexpected termination of the outsourcing agreement or liquidation of the service provider, banks should retain an appropriate level of control over the outsourcing services and the right to intervene with the appropriate measures to continue the business operations. In establishing a viable contingency plan, banks should consider the availability of alternative service providers or the possibility of bringing the outsourced activity back in-house. Outsourcing often leads to sharing of facilities operated by service provider. The bank should ensure that service providers are able to isolate the bank's information, documents and records and other assets. This is to ensure that in adverse conditions, all documents, records of transactions and information given to the service provider and assets of the bank can be removed from the possession of the service provider. If any service provider wish to enter into an agreement with the bank, they should note that the bank shall add all related clauses in the agreement which shall be non-negotiable due to regulatory requirement and hence avoid spending time on negotiations. Instead, focus on business with service provider going to lose if he decides to continue negotiations on such standard clauses of the bank.